Welcome back, traders and creators. In today's video, we're going to cover a strategy that you can implement today and is by far the most effective trading strategy in the world. And before we cover that, we have to make sure that you guys are following and subscribing to the YouTube channel and Instagram channel to make sure you guys don't miss these YouTube videos and daily Forex content. So, onto the video. These are going to be your guidelines to this next strategy. And basically I'm going to break down a trade setup and show you how each of these play into each other and show you behind the market psychology as to why this is actually going to work. So the first one is we have to identify, and before we start with this, we have to think like use smart money concepts. So put ourselves in the shoes of big hedge funds, big traders, banks, people with billion-dollar account sizes. We can't think like retail traders anymore. We have to trade like the big money, smart money concepts. So the first thing we have to do is identify retail patterns and where retail stop losses may be. The way we do that, a lot of traders trade support and resistance. And what do we have here? We have a floor, floor, floor. It breaks through and then we retest. I'm going to guess that there are some indicators that are also telling people that this is an exhaustion or that we are seeing selling pressure over in this point. And we could see by that bearish engulfing. So maybe there are sells in here, and in here. And so where do you think stop losses are going to be? Stop losses are definitely going to be above the high because that's what they've been taught. And so as soon as we extend that out, we can see that once we put this in line, this is where stop losses would be. All right. So now that we know that where the retail pattern is and where the retail stop losses are, now we have to look for the second thing, an FU candle. An FU candle is basically a candle that spikes past any recent highs or lows, showing that big money may have been in a move. And this is very small, but if you go on smaller time frames, you can see that this wick right here spikes past these highs and these highs and these highs, which are probably where retail stop loss. That's where they are. That's where all the pool of retail stop losses are. So next we have our retail pattern, check. We have our FU candle, wick goes past those highs, check. Next we need the market direction. We see that the market was already falling to the downside and then stops and then down. So we can see that this market is trending down. I wouldn't be looking for buys in a selling market, so that we have that check. Mitigation. Mitigation is basically the banks need to buy in order to sell. So when this wick was happening, big banks were buying, buying, buying until all those stop losses were hit. And since there were no more sellers left in the market drops. And now the big banks can sell because they have no one to sell against. So what they need to do is take out their buy positions in order for their sell positions to be profitable. That is called mitigation. They need to mitigate their buys in order to be profitable on the sell side. If this is a little confusing for you guys, I have multiple other videos on my channel that you can check out, but this is just a short tutorial of this trading setup. So basically, they need to mitigate out of these buys. So what happens after they take out all the retail sellers? Market drops, market comes back to mitigate. And I bet if you go on smaller time frames, within this wick, you can see some areas of where you could have sold. And on smaller time frames, we can get even more precise, and our sells can actually be around this area. And so when we take our positions, we already know that we can put our sells above the high because all the retail traders were already taken out. And so our stop losses would go just above that high, the manipulation candle, and then our take profits would go where other stop losses might be. And so now we can just make our risk to reward so much better. And then the next thing is we have to look for targets. And like I said, as above, so below. Where are the other targets? Where could other traders be looking to buy the market? Right? We have a low, we have a double bottom. Maybe they get in a little bit of profit right here. And then we just have that manipulation over and over and over again. I hope this trading plan, this trading strategy allows you guys to understand the markets a little more. And I hope that this and these videos are helping you guys. So I'll see you guys in the next video.